Welcome viewers today. We've got one of our clients, Brookside Energy, with us here today, and we've got David Prentice, who's running the company. David, how is things up in Perth?
Pretty good, thanks, Omar. It's nice to be speaking with you again.
Yeah, no, we thought it'd be good to give our shareholders an update on how Brookside's been doing. I guess recently you did your entitlement offer. The company's got some new money, and you've done a deal with Stonehorse Energy as well. So we just thought it'd be good to hear from you. So perhaps first, David, if you wouldn't mind sharing with everyone, I guess a little bit about the recent raise and the use of funds that you have planned for it as well.
Sure. Yeah. So probably take a step back and just sort of take us back to, I guess, the middle of March, or that sort of March-April period where we saw some dramatic volatility in the oil price, and the sector really was impacted by those sort of macro events. And as a team, both, I guess, the Brookside team, the Stonehorse team, and the Black Mesa guys in Oklahoma, we sat down and started to think about opportunities that might come out of this volatility and the timing in the cycle. One of the things for small cap companies is to always be active and nimble and to take advantage of these opportunities. And so we really made a conscious decision back then to look for ways to take advantage of the opportunity, be a little bit, I guess, aggressive and opportunistic during that period. So the joint venture with Stonehorse was born out of that decision to sort of start to add another pillar to Brookside's business, which is the sort of the producing property acquisition pillar to our business, and the joint venture with Stonehorse was really born out of that, out of those discussions. So it's this idea of adding some stable, low decline, long life production to both businesses that will generate cash flow in the short term, but also give us that sort of nice long tail of annuity income and exposure to the upside when commodity prices recover. We've already seen a pretty nice recovery with WTI with a 4 in front of it again, which is very pleasing.
And I guess a lot of our followers, or Brookside's followers rather, may not be too familiar, in Asia anyway, of Stonehorse Energy. Obviously another ASX listed company. Well, what do they do? And is it very similar to the Brookside strategy of, being a real estate play in the Oklahoma Basin?
Yeah, probably Stonehorse traditionally has been more focused on, just a cash flow type business. So the board and management of that, it's obviously an ASX listed company, and the board and management of that business are really, probably focused more on cash flow and that sort of producing aspect of the business, rather than necessarily looking at the upside that can come from the acreage part of the business. And that was a good fit for us at the time, because we were happy to partner with someone who had capital, and we know the board well, and we're happy to partner with someone that could come alongside us while we executed on this sort of producing property acquisition plan.
And if you wouldn't mind sharing with the viewers as well, what's happening currently in Oklahoma? Because I guess I was reading that the government over there had the lowest tax receipts in the oil and gas industry, I think, for the last 10 years. So are you able to share a little bit on the macros, what's happening specifically in Oklahoma?
Yeah, look, clearly the industry's been impacted by this volatility in the commodity prices. The rig count in the Anadarko Basin has dropped from somewhere around 90 rigs operating probably at the peak, down to sort of 10 rigs operating in the basin now. So you've seen a dramatic decrease in activity, and that obviously impacts across people's livelihoods, as well as the tax inflows for the state. But I would make the point that the people that work in the industry in Oklahoma and in the Midwest generally are very resilient, very resourceful, always looking for ways to do things better, cheaper, more efficiently. And so, in the same way that we sort of shared the view that this was a good time in the cycle to sort of start to look for opportunities, the guys on the ground have the same view. So whilst it's tough at the moment, people are out there looking for these opportunities, and a lot of the people in the industry would see this as an opportunity, company making type timing for people in the industry.
And I guess given it's a very interesting year in the US and your assets are based in the US with a election coming up, I guess what are your views? I mean, is another let's say term of Trump going to bail out the industry, and how do you guys view it? I mean, having most of your operations out there.
Yeah, well, I guess the first point I'd make is that Oklahoma's, consistently, I think the Fraser Institute has rated Oklahoma, as if not number one, certainly in the top two places in the world to do business, in the oil and gas sector. So it has a very stable regulatory regime. The environment for investing in Oklahoma has been stable, and the conditions for investment have been stable for a very long time, and has seen both Democrat and Republican governments in the White House, and largely the industry has prevailed through that through both those sort of administrations. So I don't see necessarily any impact either way. Obviously, as a sector, we're probably aligned with the Republican values, and the industry would probably would prefer to see the Republicans in the White House.
And currently, are they providing any financial aid to your industry in the States, or how is that at the moment?
Yeah, early on, as I said, in that sort of March, April period, there was some federal assistance provided to companies, payroll protection, which enabled companies to source some capital, and sort of not dissimilar to the way the Australian government has approached, assisting small businesses. So yeah, there was assistance available to small companies, and we took advantage of that, as did many of our peers, which was welcome at the time.
Okay. And I know that you've appointed a couple of new executives to the team as well. I saw Mr. Lambert having joined you guys. Would you be able to share a bit on what he's going to be doing? Sorry, I couldn't pronounce his first name, but what is he bringing on board as a GM on the commercial side?
Yeah, look, we're delighted to have Grazian on board, and he's going to really, add enormous amount of value around that sort of commercial and technical interface. So, at the moment, we've, as I said in the introduction, we've got those three pillars to our business now. So that the producing property acquisition stuff that we're doing with Stonehorse in that joint venture is obviously important. There's a big pipeline of opportunities coming out of that. And Grazian's obviously helping us in terms of looking at those opportunities and working on that pipeline. But probably more importantly, we're now starting to see some stability in the oil price. So the higher impact operated drilling pillar of the business. So drilling our own high impact horizontal wells in the SWISH area, is something that we're really quite excited to get on with, and Grazian's obviously helping me and the rest of the board in terms of how we might look to fund the drilling of that well, in the short term. So there's plenty for him to do. Okay,
that's good to hear, David. And I saw that obviously the company put out their half-year report. Would you be able to share, and give, shareholders an update in terms of the numbers? I mean, obviously, your royalty revenue got hit a little bit, and gross profit is down a bit from, the previous year. How do you instill confidence in investors during such a market with, the updated numbers you guys have put out?
Yeah, look, I think you're right. Revenues were obviously impacted by the pretty serious macro picture, in terms of the oil and gas prices. But we're still able to generate a modest profit for the half. you know, so I think from you know, from an investor's point of view, we're really focused on, you know, controlling costs at the production level. So that's obviously important for us, but also being able to you know, demonstrate that we can take capital that we've generated, whether that be through you know, the recent entitlement issue, or through, you know, or through our acreage trading activities, and take that capital and put it into assets that are going to build value in the long term. So that's, you know, that's kind of the focus for us at the moment, is, yeah, you know, sure that, you know, we've as everyone has been impacted by the lower commodity prices, they're not going to be around, you know, forever. We are going to see a recovery here. We've already seen a pretty strong recovery in the last few months, and so yeah, it's just positioning ourselves to continue to grow, if you like, through this part of the cycle, so that when the prices do recover, we'll be very, very well placed.
Okay, no, that's good to hear. And I guess perhaps also to share with the investors, I mean, what are you guys currently doing on a promotional front? And I mean, I saw that CPS and Jason Peterson got involved. What are you guys doing at let's say this next quarter in terms of promoting the company?
Yeah, look, I guess we're coming to grips with what tools we have available to us to promote the business. You know, we're delighted to be partnering with CPS on that last raising, and obviously appointing them as our corporate advisor. So no doubt there'll be opportunities to promote the business. You know, getting I guess a new group of investors looking at the story, and you know, that's always important. You know, this end of the market, trying to differentiate yourself and create a new audience for your story. So that's been a great step forward in the last few weeks. And, you know, obviously working with you guys in terms of, you know, whatever, you know, webinars we've been able to participate in. You know, it's reasonably tough in this this new world we're living in. Everything's got to be done via, you know, Zoom calls or the like. So, but yeah, look, we've got very, very strong news flow coming into the end of the year. You know, we've got that relationship with CPS now, which I think will help us to get more people looking at the story. And the combination of those two things should, you know, we should see us, you know, with a pretty strong finish to the year.
And what would your leaving thoughts be to investors? I mean, I think there's a lot of opportunities, it seems, in the basin at the moment in Oklahoma. I'm guessing a lot of companies are perhaps, you know, going through bankruptcy. So I think for you guys, I mean, if you have cash to pick up assets, I think it's quite interesting. So what are your closing thoughts, I guess?
Yeah, we get a lot of inbound calls from investors that are interested in that sort of, you know, counter-cyclical approach. So, you know, companies that are, you know, do have cash on the balance sheet and a team ready to execute, that are looking to pick up assets, you know, distressed assets, if you like. So, you know, I think we're well placed to take advantage of that, and that's probably unique amongst our peers. And you know, and again, you know, coming back to those three pillars to our business, just that, you know, having that optionality to be able to you know, build on our acreage position, which is obviously going to build reserves for the long term, and then having something to look forward to in terms of those high impact wells, the dual well being the first one that we'd like to drill. You know, those are sort of company making wells that you know, opportunity to drill here in the short term. So, you know, having that nice mix of sort of, you know, the stable income coming out of the Orion project, high impact drilling out of the you know, the SWISH AOI, and then continue to do what we do on the acreage front. So three pretty strong pillars. Great.
And yeah, I mean, thanks again for sharing, David, and giving us an update. It's great to see that, you know, the share price is headed in the right direction. Liquidity's been picking up, and I guess it's a very opportunistic period, it seems, in the basin. So viewers, please do follow Brookside Energy. The ticker is BRK. I guess the same ticker as Berkshire Hathaway in the US. So hopefully some of those guys pick up on that as well. But, you know, thanks, David, again. And yeah, we look forward to giving an update, you know, in the next quarter as well.
Thanks very much, Omar. It was great to be with you.
Likewise. Cheers.